Can you see the book?
Yes, sir.
Okay, so this is the book. I think some of you like Kishore or Suraksha, are you able to see? I mean, look at the book. I mean, you are able to browse through the book. You have got the rights.
Yes, sir. That day I tried.
Okay, so others who want to, I mean, of course, you will get the book only next week. So anybody who wants to can just go through. Otherwise, my slides will be good enough. Okay, fine. When you're good, so this is basically the book which you have to read whenever I ask you to read, basically, or you can just read it for your own knowledge. Okay, so let's just go and see what all we have to supposed to do. Okay, so first one is basic concepts that must so we are just covering the first unit. Okay, this for this I have prepared the slide, which is what is assessment year, what is previous year. So we are doing this. Okay, fine. And then apart from that, we have the second chapter will be covering will be residential status and its effects on tax incidence. So the second topic we'll be doing is called the residential status. Are you able to hear me, Suraksha, Kishore, Tejasvi,
Yes, sir.
Manu? Okay. So the second topic will be residential status. Whether you are non-resident, you are resident. Okay. So if you are, you're left. For example, you are a non-resident. Suppose you are Indian citizen, but you have gone abroad and working there. So your income which you are earning in say other country will not be taxed in India. Okay. So we are going to understand the law regarding that in this chapter. Then we have income which is exempt from tax. Okay, so there are certain incomes which are exempt from tax. For example, agriculture income, the farmers' incomes, they are not tax at all. So all this incomes, and there are many more. Okay, so what income is exempt under section 10? Okay, so all the incomes which are given under section 10, they are all exempted from income tax. Okay, fine. So there are many incomes. So we are going to understand them. Then we have the five categories of income. Okay, income from the head salaries. So if you are working in a company and you're drawing a salary, so what is the law regarding that? How you are supposed to pay tax? Okay. Then we have income from income from house property. Suppose you have a house property and you have given it in rent to someone, and the rental what you are getting, or suppose you have a commercial property and you have given it on rent, then you have to pay tax on that. So the law is given under this. So there are five heads: income from salaries, income from house property, income from profit and gains of business. So suppose you are running a business, so all the rules and regarding how you're going to calculate your profit and how much tax you're supposed to pay. So that is given under this part of the law. Then, so this is the sixth chapter. Then we have income from capital gains. For example, if you have any asset, like for example, if you have some shares or if you have some building or land, and if you sell it and make money out of it, suppose you bought a land for say 1 lakh and you sold for 10 lakhs, so 9 lakh will become your capital gain. So then you have to pay tax on that. So this is the law regarding capital gains. Then last one is income from other sources. Okay, so there are these are the various heads. So we're going to talk about income from other sources, like you are getting interest on or dividend from the companies. Okay, so that will be your other income source, or many other kind will be considered as income from other sources. So we're going to understand that. So broadly, there are these are the main chapters, and of course that there will be many other chapters which are there. So I'm just not covering at the moment those chapters. So we are coming back to our slide. Oh, so you could see the book now.
Yes, sir.
Okay, so can you see the slide now? Back to slide.
Yes, sir.
Okay. Okay, so just read this, Kishore.
Prerequisites.
No, perquisites.
Achha. Perquisites in the hands of employee.
Now, whenever you are working in a company, okay, so you may get a car from the company or furniture. Okay, so these are all a house for staying. So these are all your perquisites. Okay, apart from salary, a company can give you lot of perquisites. First time when I joined a company, which was, way back in what 1990 or so. That time, the company gave me a car. They gave me, some money to buy, furniture and for my house. So all these are the perquisites. Okay, so the a person I had supposed to pay tax on that. So okay, so read this.
Any perquisites or profits in lieu of salary is treated as income in the hands of an employee. Provisions illustrated X is employed by A Limited. Apart from salary, he has been provided a rent-free house by the employer. The value of the perquisite in respect of the rent-free house is taxable as income in the hands of X.
Okay, so I should put here, a marker. So this is, the example which is given to illustrate that. So which means that, X is an employed, X is employed by A Limited. Apart from the salary, he has been provided a rent-free house by the employer. The value of perquisite in the hands of rent-free, in respect of rent-free house is taxable as income in the hands of X. Fine. So the company has given me a house, and it's a rent-free house. So either the company may own that house, or if they have taken it rent for me, so I have to pay some tax on that. So we'll understand later on how it is how it is taxed.
So you are not giving any money, you're not earning anything from that house, then why will you or how will you give the tax?
For example, otherwise, if suppose when you are working in a company or you're anyway, you have to stay in a house. So it is your, expenditure. The
Hmm.
company is actually meeting that expenditure for you. When we
Okay.
live in this world, we should live in a house, isn't it?
Yes, sir.
So if the company says, okay, we'll give you some money and you take a house on rent, but the company may say, okay, we will provide you a house. Okay, so we will not pay any rent to you so that you can take a house on rent. So you can always, save taxes by doing so. Okay, so the income tax says that even company is giving you a house. Okay, so that is a
Hmm.
perquisite. Okay, and you have to pay a tax on that house.
Okay,
Right?
sir.
भाई अगर कंपनी आपको घर नहीं देती तो आपको घर किराए पे लेना पड़ता. So that house you would have, rent you would have paid it from your salary.
Hmm.
Your salary, entire salary is taxable. Now you can always avoid taxes if the company says that we will not pay you. You don't have to use your salary for living in a house. We'll give you a house. Okay, so it is your expenditure. Company is just helping you, so you have to pay tax on that house also, which they have given you rent-free house. Okay, fine. So that's this thing. It will be called perquisite in the hands of the employee. Okay. For example, a company can say that we give you a servant. Okay, a servant will be given, and the company is paying 5,000 rupees salary to the servant. So that 5,000 will become the perquisite in your hands, and you have to pay tax on it, isn't it? Okay.
Okay.
Suppose you have
So,
a
so,
house. So
sir, that 5,000 will be added to your existing income.
absolutely. Suppose you are having an income of say 1 lakh rupees. So now your income will be 1 lakh 5,000 rupees per month, because
And
5,000 is the salary of a servant who is being employed for you specifically.
and similar is the case with the house. If the company
Ha,
is paying 20,000 of rent, that
ha.
20,000 will be added to your
Absolutely,
income.
absolutely, absolutely.
Okay, okay.
Okay. Of course, the rules can differ. So what he's saying is absolutely right. That if company is paying 20,000, it will be added to your salary. Okay. But it is not as the rules are. You have certain rules and regulations which we will be learning later. Okay. Fine. Okay.
Huh.
So now
Any special allowance or benefit? Any special allowance or benefit specifically granted to the SSC to meet expenses wholly, necessarily, and exclusively for the performance of the duties of an office or employment is treated as income.
so any allowance which has been given by the company, okay, that will be treated as an income in the hands of the employee. For example, अगर
Provision
हाँ एक सेकंड,
illustrated.
हाँ इसको भी मैं यहाँ यूं डाल दूं, ये अलग है. Can you read?
Provisions illustrated. X is employed by A limit. X is employed by A Limited. He gets rupees 3,000 per month as conveyance allowance apart from salary. Rupees 3,000 per month is treated as income. Any amount which is spent for official purposes out of conveyance allowance is exempt under section 10.
Now, if you get conveyance apart from your salary, so that conveyance will be included in your income. But if you are spending some money for for certain official purposes, suppose you have to go to some office, some place, for doing your official duties, so that conveyance which is given to you, that is exempt under section 10. But it's a regular allowance, then you are supposed to pay tax. Okay, like for example, suppose you are working in a company says they will give you 3,000 rupees conveyance allowance apart from your salary of say 1 lakh. So your salary will be 1 lakh 3,000. But once you are employed there, company says, okay, you just go to Connaught Place and go to that office for some work, for doing the official work. So they give you say 1,000 rupees as conveyance for that, meeting that expense on that day. So that is an official expense. So that is not treated as income. So that is exempt under section 10. Is that okay?
Yes, sir.
Okay.
City compensatory allowance, dearness allowance. City compensatory allowance or dearness allowance is treated as income.
Now, suppose you are staying in a place, okay? Company may say that we are going to give you a city compensatory allowance. For example, when I was staying in Delhi, and I was transferred to a place in Maharashtra, very remote place. So I got 3,000 rupees as city compensatory allowance. So it was in a place called Ashti, which is very remote place in India, which is district Chandrapur, near Chandrapur, which is in Maharashtra, which is a very very remote place in India. So company said, okay, if we transfer it to you to this place, we'll give you 5,000 rupees extra salary. So that city compensatory allowance, or even if it is a DNS allowance, is treated as income, and you have to pay tax on that.
Any benefit for perquisite to a director, a non-monetary benefit or perquisite is treated as income in the hands of the following. If it is given by company to a director, whole-time or part-time, or a relative of a director,
Or,
or if it is given by a
uh,
or if it is given by a company to a person who has a substantial interest in the company or a relative of such person. Relative for this purpose means the husband, wife, brother or sister, or any lineal ascendant or descendant of that individual.
descendant. Uh,
If a person is beneficial owner of 20% or more of equity share capital in a company, then such person is known as a person who has substantial interest in the company. The aforesaid rule is also applicable if any sum is paid by company in respect of any obligation, which but for such payment would have been payable by the director or any other aforesaid person.
Okay, so what is all said, we have some question, this thing, I have explained it through examples. Read this.
The following illustrations are given to have better understanding. First, X is a director in a company. The company provides a domestic servant for private purposes. The perquisite value of domestic servant is treated as income of X.
So even if you are a director, okay, then if company provides you a servant, okay, and pays salary of that servant, it will be treated as the income of the director X. Okay.
X holds 20% equity share capital in A Limited. A Limited repays the loans of rupees 15,000 on behalf of X. Rupees 15,000 is treated as income of X.
Now suppose you are you are X and you hold 20% shares of a company A Limited. So A Limited repays a loan of 15,000 on behalf of X. So that 15,000 will be treated as an income of X because you are having substantial interest in that company because you are holding more than 20% shares capital of the company. If you look at here, uh, read the if a person is beneficial owner of 20% or more of the equity share capital of a company, then such person is known as a person who has a substantial interest in the company. So if you are holding a 20% share of another company and the company pays something on your behalf, okay, which you are supposed to pay, then it becomes income in your hands. Is that clear?
Yes, sir.
So in case if you are, a shareholder of a company and if you have more than 20% share of that company and the company pays something which you are supposed to pay yourself, Okay, you are supposed to pay your loan yourself, isn't it? If you're taken a loan from the bank, you have to repay the loan yourself. But the company is paying you. Company is paying that repayment of loan. Then that repayment of loan will become your income. Okay.
So one more thing, if this 15,000 of income is added to my existing income,
हाँ
which is a loan, interest on loan, so will this be eligible for deduction also?
हाँ, अगर suppose if there is if you're taken a loan for housing purposes or something, okay, which will be
Yeah.
will understand. Suppose it becomes an it is paid by the company, it becomes your income. Then
Huh?
if you are paying interest and it meets the criteria as an expense, okay. For example, you are paying a loan for buying a house and you are earning some income from your house, so it will reduce your income and you have to pay less tax. So in that case, it will become deductible from your income which you earned from the house. Okay, fine.
Okay.
कोई इनकम होनी चाहिए उसके अगेंस्ट तो खर्चा क्लेम होगा ना. अगर आप
हाँ,
सपोज आपने कोई घर लिया हुआ है वो उसको आपने किराए पे दे दिया
नहीं
उससे
सर, मैं
आपने
वही बोल रहा हूँ कि
हाँ
मान लीजिए मैं इसी घर पे रह रहा हूँ और मेरा जो 15,000 का जो ईएमआई काइंड ऑफ थिंग है,
हाँ
वो मेरी कंपनी पे कर रही है.
हाँ तो उसमें भी फिर आपको अंडर सेक्शन 80C में बेनिफिट मिल सकता है विच विल डिस्कस लेटर. ओके.
Okay, sir. Third, B is a director in C Limited. C Limited pays a sum of rupees 47,000 to ITC Hotels on behalf of Mrs. B. The payment is made only because B is director in C Limited. Rupees 47,000 is treated as income of B.
Now B is a director in a company called C Limited, and C Limited has paid 47,000 rupees to ITC Hotels on behalf of Mrs. B. Maybe that she has stayed in a hotel. Mrs. B is wife of B. Okay, so wife of the director. So 47,000 will become an income of Mr. B, because Mrs. B was supposed to pay this money herself, whereas it was paid by the company C, and company C in company C, B is a director, so it will be included in the income of B. Is this clear?
Yes, sir.
Okay.
Any benefits or perquisite to a representative SSE. Any non-monetary benefit or perquisite to a representative SSE like a trustee appointed under a trust is treated as income.
Okay, so I'm just skipping this. Okay, अब यहाँ पढ़ लें. Okay.
Any sum chargeable under section 28, 41 and 59. Any sum chargeable under section 28, 41 and 59 is taxable as income. Some of such cases are given below. X is an agent of A Limited. He gets a compensation of 2 lakh at the time of termination of his agency from A Limited. Rupees 2 lakh is treated as income.
So X is an agent of A Limited. Okay, you are an agent of some company. So the company pays 2 lakh rupees to you at the time when there is a termination of your agreement. So this will become your income in your hands. Okay.
A profit of 2,50,000 is generated by A Limited on sale of license granted under the Import Control Order 1955. Rupees 2,50,000 is treated as income of A Limited.
So okay, so I mean, of course, these examples we'll do later because I have to explain everything to you. Okay, so I'm just skipping them at the moment. Okay, just hold on. Okay, just read this.
Employer's contribution towards Provident Fund. Any sum received by an employer from his employees as employee's contribution to any Provident Fund, superannuation fund, or staff welfare fund is taxable as income of the employer.
Okay, now if you are working in a company, okay, there's something called provident fund. Okay, so when you are working in a company, you have to contribute to provident fund. This is for your retirement benefits. Okay, so when you are working in a company, there is something called provident fund which is started by the government, where you have to contribute and the employer also contributes in that provident fund. Okay, and then that money is normally given to you at the time when you retire at the age of 60, or you can even take that money earlier if you have completed certain number of years. So any sum received by an employer from his employees as employer's contribution to any provident fund, superannuation fund, or welfare fund is taxable income of the employer. So any sum received by the employer any sum received by an employer from his employees. Now, this is employee's contribution. Okay. For example, the employer and employee have to contribute some money. So employee has its own contribution, employer will have their own contribution, and the money will be deposited in the provident fund. Suppose, like for example, my salary is 1 lakh, okay, and 10% I contribute and 10% employer contribute. So that means 20,000 rupees will become will has to be deposited by the in the provident fund account. Okay. Now, first the employer is going to receive this money from the employee, and then they're going to deposit this money in a provident fund or maybe superannuation fund or any this thing. Okay. So this will become taxable in the hands of the employer. Okay. Let's understand under what conditions. Read this.
Employer can claim deduction under Section 36(1) if such sum is credited by the employer to the employee's account in the relevant fund before the due date under Provident Fund regulations.
So that means if suppose the company takes money from the employee, it needs to be deposited with the provident fund, this thing account of the employee. Then only the company can claim this as an expense. Okay. Otherwise, it will become an income of the employer. So let's understand this through an example. Let's read this example.
Net profit of X Limited for the previous year, 23-24, is 7,86,000. It is calculated after debiting salary to employees rupees 5 lakh. Out of rupees 5 lakh, rupees 50,000 is employees' contribution towards Provident Fund. Rupees 50,000 is transferred by X Limited to the Provident Fund account of the employees as follows. Rupees 30,000 before the due date of making such payment and rupees 20,000 after the due date of such payment. Income of X Limited shall be calculated as under.
Now, earlier what was happening was that, companies, many companies, they were deducting, the contribution from the employee salary, and they were not depositing with the provident fund authorities. Okay. And they were claiming this as an expense. So the new rule has come maybe about 3-4 years back that it will be treated as an income unless the company doesn't deposit the money with the fund. So let's see. Read this.
Net profit as per profit and loss account is rupees 7,86,000. Employees' contribution towards Provident Fund, which is treated as income of X Limited, 50,000, total 8,36,000. Less amount paid by X Limited on or before the due date of making Provident Fund payment, 30,000. Taxable income of X Limited is 8,06,000.
So now, what was the amount which was supposed to be deposited by the employer? How much was first deducted from the employee? 50,000 rupees. Okay. His salary was 5 lakh rupees. 50,000 was deducted from his salary. The company was supposed to deposit this with the provident fund authorities, but they deposited only 30,000 before due date. Okay.
Yes,
So
sir.
if you are deposited before due date, then you are only eligible for the, otherwise your income, you have to pay income at a higher this thing. You have to pay tax at the 8,06,000. So next year, so you lose that exemption. Is it clear?
Yes, sir.
So if you have, the net is, suppose if you have deducted some money from the employee, okay, which is basically his contribution towards the provident fund, and you have not deposited money with the provident fund authorities or with the provident fund account of the employee, then that will be added to your income. So in this case, the profit was 7,86,000 and 50,000 will be treated as income, and out of that 30,000 which is deposited, he will get a deduction. Rest will be treated as an income. Okay, so his income will be 20,000 rupees which he has not deposited. So his income will go up from 7,86,000 to 8,06,000. Is this clear to everyone? Let me know. कुछ समझ में आया?
Yes, sir.
Okay. Look at this now. Income is 7,86,000. Okay. Now he has given a salary of 5 lakh to some employee. On that 5 lakh, 50,000 was deducted, his contribution toward the provident fund. Okay. Now this 50,000 belongs to the employee. So it has to go to his provident fund account, but the employer has pocketed that provident fund. He has not deposited in time. So he'll basically, that money which he has not deposited will be treated as his income. Okay. Like for example, a company like, this thing, Kingfisher Airlines, where they took a lot of money from the employees, and they had not deposited money in their account, so that was treated as income of that company, and they were supposed to pay income tax on that. It is just to basically discourage the employers. If they have to claim the deduction, they need to deposit this money in time. If they don't, then it will be treated as your income, and the company has to pay tax on it. So that is a penalty on those people basically. Okay, fine. So I'm just skipping this. I'm just skipping many things because they are all, you can just read. What is gross total income? So this is very important. Okay, so when we are starting from the thing which are very, now becomes very interesting part of it. Okay, just read this, Kishore.
What is gross total income? As per section 14, income of a person is computed under the following 5 heads.
So there are 5 heads of income.